Good morning. It's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of January the 25th. Again, I hope everybody had a great weekend. Talk about a difference from last weekend to the weekend before. I think 2 weekends ago it was 75 degrees. It was beautiful weather, and last weekend we're down in the 40s. Amazing the difference in weather changes in Northern California. A big shout out and a big thank you to everybody that participated in our Anderson Rotary's 51st annual crab feed. We've been doing this crab feed for 51 years. It's a major fundraiser for our scholarship funds, and we normally serve 1,000 people, have a big band, auction and everything, but of course because of COVID we couldn't do that. So we did a drive-through crab feed. We still served almost 500 people crab. It was a great success, and again, thank you so much for everybody that donated. Okay, so what's happening in our market? Last week, we saw mortgage rates actually improve at the end of the week better than they started. So what are we looking at this week? We're looking at central banks, economic data, and stimulus. So over the last few weeks, most economies, major economies around the world have come out, the central banks have come out with their interest rate policy reports to say, hey, what are we looking at for the remainder of the year? And there were no changes. Everybody's keeping their rates down. Nobody's changing policy. This week, our Federal Reserve is coming out with their interest rate and policy reports. They start meeting tomorrow. They'll come out with everything on Wednesday. The bond market investors and everybody else doesn't expect any change. We're going to see rates stay low for the remainder of the year, maybe start tapering off on buying mortgage-backed securities at the fourth quarter, maybe, it really depends, and no policy change really going into 2021. So unless there's a big shift in what we expect, we don't expect it to move rates that much. Second thing is economic news. It's a very busy week for economic reports. We're going to see a lot of housing data, a lot of economic reports, PCE and GDP, gross domestic product, which is a big indicator on inflation, and a lot of manufacturing reports. How are companies buying products? Are they buying a lot of stuff? Are they spending money? So there's three things on these reports that can move rates. The last 5 or 6 months, the big bright spots in our economy have been housing and manufacturing. If housing numbers come in a lot higher than expected, it means everybody's buying houses. We don't expect rates to stay low, and those rates could creep up. If manufacturing comes in a lot higher than expected, it means businesses are spending money, they're buying product, they're making things. That's good for the economy. That could drive mortgage rates up. And then inflation. Inflation is really the death of rates. So if we start to see some weakening inflation numbers, meaning that inflation rate's going up, it's going to cost more to buy milk and bread, that's going to cause rates to go up. But again, we don't expect a lot of different information or changes to the estimates, but we'll be watching those numbers closely towards the Wednesday, Thursday, and Friday. Stimulus. The House and the Senate have been discussing a third stimulus bill, $1.6 trillion bill. The big thing in this is, giving out an additional $1,400 a month to people. When can we expect the money? Not anytime soon. Best estimates are end of February into March. So even though the Democrats control the House and the Senate, there's a lot of bipartisan support that wants to lower this stimulus bill much lower than they have, and they are really still hammering out the details, and that just takes time. If there's some surprise agreement this week, then yes, that probably will move rates up because the stimulus money hitting people's bank accounts is going to boost spending, good for the economy, rates will go up. So we're going to start the week floating. We expect a lot of volatility because of all the economic news coming out. However, unless we get some big surprise with the Federal Reserve or stimulus agreement, we don't expect it to move rates very much this week. In fact, there's a better chance that rates actually will go lower and get better than rates going up. So we'll be watching that. If you or your clients need any information about mortgage rates, please give me a call. All the information is down below. If you know somebody that could benefit from this update, please forward it to them. And if you have any comments on today's report, love to hear it. Thank you. Have a very productive week, and we'll talk to you soon.